Hello everyone, welcome to Akira's Academy of Accounting and Finance, and today we are going to discuss about the remaining two parts of this particular chapter, that is adjustment of capital and death of a partner. Okay, now adjustment of a capital, as the terminology itself says, that the partners, the new partners, because the retiring partner or deceased partner, they are not going to adjust the capital, right? We already adjusted its capital and we will dispose of it, the amount, to that particular retiring partner or to the deceased partner. But the existing partner, when they reconstitute a new firm, how they will adjust their capital? Sometimes they don't have to adjust, whatever is the capital amount, that's how they have to keep. But as you are studying, so to complicate your illustration, this is something, a new topic that we have to discuss, right? And it happens also, right? So there is an adjustment of capital. Adjustment of capital, there are three situations, right? Let's first consider an example of three partners, A, B and C, right? Their profit sharing ratio was 3:2:1. Okay, now A retires, let's say. Okay, nothing has been mentioned about the new profit sharing ratio, so the new profit sharing ratio of B and C is going to be 2:1. In the illustration, it may be specified that what will be their new profit sharing ratio. In the illustration, it may be specified that how much they will be gaining. So their gaining ratio will be specified, and accordingly you will determine their new profit sharing ratio. If nothing is being specified, then whatever they were sharing it earlier in the same ratio, they are going to share their profits. Okay, so the new profit sharing ratio is, let's say, 2:1. Now there are three situations. Let's assume first, let's say their capital amount before A retires, and after making all these adjustments of the revaluation of assets, of the accumulated profits and losses, of the goodwill, everything, after adjusting everything, their capital comes out to be, let's say, for A we can say 50,000. This is for A. For B, let's say it's 60,000, and for C, let's say it's 40,000. Okay, this is their adjusted capital, existing capital. Okay, now they have to adjust their capital. So the first situation could be when the capital is let's say specified, how much should be their capital, that is specified, that how much capital they are supposed to keep in their business, in the balance sheet, like what will be their capital amount. Now if the capital is specified, let's say we will take is the new capital of these two partners should be 1,20,000. Okay, this should be the new capital when of B and C. Okay, so as per the new capital, how much should be their capital amount? New capital as per new profit sharing ratio, how much should be their capital amount? This capital amount is specified that the total capital of the firm should be 1,20,000, and that should be adjusted according to their new profit sharing ratio, right? So their new profit sharing ratio is 2:1, and the new capital is being given 1,20,000. So we will divide, let's say for B it will be 2/3, 1 3s are 4 3s are 4 2s are 80,000, and for C it will be 1/3, that is 40,000. This should be their new capital. Okay, now what is their existing capital? What is their existing capital already after making all the adjustments? It is 60,000 and 40,000, right? So now B is short of certain amount. Okay, so B has to bring certain amount in cash in the firm. How much? His capital should be 80,000. His capital is 60,000, so he will bring 20,000. Wherein C does not have to bring anything. So the cash to be brought in by the partners, brought in or paid off. Okay, if we have to pay off, how much we need to pay off, that also we need to specify. Okay, so here, as per the new profit sharing ratio and the capital amount that they have to maintain in the firm, it should be 120, and B's capital ratio amount should be 80,000 and C's it should be 40,000, wherein B's existing capital after making the adjustments of all the goodwills and reserves and everything, revaluation gain and loss, it is 60,000 and 40,000. So B has to bring 20,000 in cash into the firm. What will be the journal entry? Cash comes into the business, so cash account debit. Who is bringing this particular amount? B is bringing, so to B's capital account. So cash or bank account debit to B's capital account 20,000. Okay, easy, understood. This could be the first situation wherein the capital amount is specified. Now let's say the second situation wherein when the capital is not specified. Okay, capital is not specified. How much should be the capital, new capital of the firm? If it is not specified, then what we need to consider? What is the capital of B? 60,000. B existing capital of B after adjustment is 60,000 and existing capital of C is 40,000. So the new capital of the firm should be how much? This should be the total capital. This should be the new capital of the new firm. Okay, new firm, which they are, it's nothing is being specified how much is the capital of the new firm. So then we have to consider what is the existing capital of B and what is the existing capital of C. So the new capital should be how much? 1 lakh. And as per the profit sharing ratio, how much should be the B's capital amount and how much should be the C's capital amount? So the new, we'll make again a chart wherein we will consider how much it should be. So the new capital as per new profit sharing ratio should be how much? It's new total capital should be 1 lakh, right? And the ratio is 2:1, so 2/3 of B, 2/3 of B, that is 1 3s are 3.3333, that is for 33,333 into 2, it comes around 66,667, and for C it is 1/3, that is 33,333. Okay, this should be the new capital of the new partners. Okay, of the new partners, that is the existing partners who has reconstituted the firm. So it should, for B it should be 66,667, wherein for C it should be 33,333. But how much is their existing capital? Existing capital after making the adjustments of all the things, it is 60,000 and here it is 40,000. Okay, 60,000 and 40,000. So new, this is the new capital. Okay, so cash to be brought in or paid off to the partners. We have to the cash has to be brought in to by the partners, or we have to, the firm has to pay off. So for B it should be 66,667, wherein it is 60,000, so he has to bring in cash of 6,667, wherein in case of C it should be 33,333, but it is 40,000. So how much, what we need to do, we need to pay to C, so the amount is 6,667 close brackets. Okay, so what will be the journal entry? One partner brings in the cash, so cash comes into the business, so cash account debit. Who is bringing the cash? B. So B's capital account will get credited by 6,667. And the other partner, this is the first entry, and the other partner, we need to pay cash to the other partner. To whom we are paying? To C we are paying. So C's capital account will be debited and the cash goes out from the firm. That is how much? 6,667. Okay, this two situation you understood, where in one situation the capital is specified, other situation the capital is not specified, but after adjustment how much is their capital? We found out the new capital of the firm, it is 1 lakh. 1 lakh, how much proportion they should, their capital amount should be in the proportion of the new profit sharing ratio? We determined it. The existing capital after adjustment is this much, so one partner needs to bring in the cash and another partner we need to pay off the cash to the another partner. Okay, understood? Now there could be a third situation. The third situation could be what? The third situation could be the retiring partner, the partner who is retiring. Okay, that retiring partner's amount, okay, is to be paid off by the existing partners in such a way that the total capital amount remains the same. Okay, the total capital amount, so there is no such adjustment in the capital amount. Total capital should remain the same. And what they need to do, whatever amount is due to the retiring partner is to be paid off by the existing partners. Okay, so the total capital is how much? 50,000 of A, 60,000 of B, and for C it is 40,000. So the total capital is 1,50,000. Okay, this is the new capital of the firm. This should not change. The capital should not change. The capital should remain the same, and whatever amount is due to the retiring partner will be paid off by the existing partners, and they have how they will pay in their new profit sharing ratio. That should be the ratio of the capital amount, and they will bring in the cash or whatever it is. So the total capital is 1,50,000, right? And new capital as per the new profit sharing ratio will be how much? What is the new profit sharing ratio? 2:1. Okay, so for B it will be how much? B's new capital will be how much? 1,50,000 into 2/3, that is 1 3s are 5, 3s are 5, 2, it's 1 lakh. Okay, and C's new capital is how much? 150 into 1/3, that is 50,000. Okay, this should be the new capital of B and C. Okay, now new capital, we will determine how much they will bring it as per new profit sharing ratio is 1 lakh. This is of B and this is of C. 1 lakh, and of C is 50,000, right? And the existing capital is how much? Existing capital is 60,000 and 40,000. Okay, 60,000 and 40,000. So cash to be brought in is how much? 40,000 B will bring. His capital should be 1 lakh. His capital is 60,000, so he will bring 40,000, wherein C's capital should be 50,000 and his capital is 40,000, so he will bring 10,000. Okay, this much will be paid by B and C to A. What will be the journal entry? First entry, they bring in the cash, so cash account debit 40 plus 10, that is 50,000 to B's capital account 50,000. Oh sorry, B will bring 40,000, and to C's capital account, that is 10,000. C will bring 10,000, and now we will pay off to the retiring partner the amount. Who is the retiring partner? A. A's capital account debit, we close its account and pay 50,000 to cash account. 50,000. This is how we are going to adjust the new capital based on the three situation, wherein in the first situation the capital amount is specified, in the second situation capital amount is not specified, so we have to take the capital which is already there after making adjustment of the existing partners, and in the third situation is what, the capital should not change, the total capital of the firm should remain the same, okay, but whatever amount is due to the retiring partner will be brought in by the existing partners. They are supposed to pay. How they will pay? Based on the new profit sharing ratio, how much should be their capital and how much is their capital, whatever deficient amount is there, they have to bring in that particular cash amount, and then the retiring partner will be paid off. So this is how we will make the adjustment of capital. Now the next part is, the next topic that we are going to discuss about is the death of a partner. Now we have already discussed about it, right? Like in the case of a retirement, all the other things will remain the same, nothing is going to change. The only difference would be while making the payment. In case of retirement, the partner is already there, so we will make the payment to the retiring partner, right? In case of death, the partner has already passed away, so to whom we will make the payment? To that partner's, his or her executor, to that person we are going to make the payment. Now in case of retirement, the date is specified, we know that the end of the year this particular partner is going to retire, so that based on that we make all the adjustment, okay. But death is not specified, the date of death is not specified, it can occur any point of time. Then in that particular situation, what all adjustment we will make? It's based on that only, and we have discussed about it when we are paying to the retiring partner when he retires in the mid of the year, okay. How the profit will be shared to the retiring partner if he retires in the mid of the year. Similarly, how the profit will be shared to the deceased partner's executors if that particular partner dies in the mid of the year, okay. Now the first situation, how profit will be shared, the first situation which we consider is, let's say what we need to do, we need to consider the past year profit, okay. How much, like current year, in the mid of the year, at any point if the partner pass away, then it's difficult to calculate the profit amount, as well as it won't show the actual profit, because the business sometimes earn based on certain situations and circumstances, their profit differ, okay. So the whole year profit we are not able to determine, as well it is cumbersome to calculate all these things. So what we need to do, we need to consider the past year profit, how much the firm earns in the past year, okay. Based on that, how much profit the firm will have in this particular current year. Let's say, I'll just erase it. Okay, let's say the current last year profit was 1 lakh. Okay, now let's say the partner dies on 30th of June. Like this is just a mere example, we don't know this also, okay. So the past year profit was 1 lakh. Okay, now on 30th June if he passes away, now what will be the profit amount? This was for the whole year, how much we need to determine? We need to determine for 3 months, April, May and June. So 1 lakh into 3 by 12, 1343, that is 25,000 is, we consider the profit of the current year. This is current year's 3 months profit. Mind it, this is 3 months profit, okay. Now let's say in the same situation, let's say A pass away, okay. So we need to give profit to A for 3 months. This 25,000 belongs to all the 3 partners, okay. So A's share is how much? 25,000 into 3 by 5, 6, 3, 6, 1, 3s are 2, 3s are 1, 2s are 12,000 500. So the profit of A is 12,500 for 3 months. Okay, this is how we will calculate the profit. The first situation, consider the past year profit, how much profit the firm earns in the past year. Based on that, the proportionate amount we will calculate for the current year, and based on the deceased partner's ratio we will give that particular profit amount. Or else the second situation could be, consider the average profit of the past few years. It could be 3 years, 4 years, 5 years, whatever the firm decides. Okay, so based on that the profit will be determined. That will be the average profit for the whole year. Minded, this you need to consider. Let's say it was 30,000, then it was 40,000, then it was 80,000. So in total how much it was? 8 plus 4, 12, 1,50,000. This is for 3 years. So the average of 150 is 50,000. This 50,000 was for whole year. Okay, whole year. Partner died. The partner's death occurred on 30th of June. So for 50,000 into 3 by 12. Okay, 1 3s are 4 3s are 1 4s are 50,000. Same we consider? No. So it is 12,500. Okay, 12,500. This is belongs to all the 3 partners. This 12,500 we will give to A, his particular share, that is 3/6. Sorry, 3/6 of 12,500, that is 1 3s are 2 3s are 1 2s are 6 2 5 0. So we will give to A 6,250 rupees, his share of profit, not to A, to the executor of A. Similarly, this could be the second situation wherein we consider the average profit of the past 3 years or 4 years or 5 years. The third situation could be considered, the profit is to be considered based on the sales. Okay, let's say past year sales was 5 lakh. Okay, past year's sales was 5 lakh and the firm earns a profit of 50,000. That is how much profit the firm earns based on sales? 50,000 divided by 5 lakh, it's 10%, or we can say 1/10. Okay, 1/10 of the sales was profit. Okay, whatever sales was there, 1/10 of that was the profit of the past year. So current year, how much is the sales? How much is the sales? Let's say current year sales is 80,000. 80,000. So 1/10 of 80,000 is how much? 8,000. 8,000 is the current year's till 30th June. This sales is till 30th of June. Okay, till 30th of June. So till 30th of June we assume the profit is 8,000. Okay, and how much we are going to give to A? 8,000 into 3 by 6, 1 3 2 3 1, that is 4,000. This much is the profit share of the profit we will give to A. Okay, to its executor. The only difference is, earlier when we considered the retirement of a partner, how the profit will be shared, we will give to the retiring partner. In this situation, what we need to consider, we are giving this amount to its executor. How it will be given, that we discussed. Now in the mid of the year we are making the payment, right? So we need to, the profit and loss account, when we prepare at the end of the year. So what we need to do, if you remember, at that time we also discussed that we need to open a temporary account. Okay, so what is that temporary account? Profit and loss suspense account. Okay, that profit and loss suspense account will be opened and the payment will be made to the deceased partner. What will be the entry? Okay, profit and loss suspense account debit. Let's say we consider this 8,000 as the profit. 8,000 is total profit, that is 4,000. Okay, profit and loss 4,000 we need to give to the deceased partner. So profit and loss suspense account debit 4,000 to A's capital account 4,000. Okay, and then at the end of the year we need to close this account. Now we need to close this account. This account will get credited, whose account will get debited, who are going to gain when the partner retires or when the partner pass away? The existing partner. Okay, the existing partner, they are going to gain, so that particular profit amount will be given by the existing partner in their gaining ratio. So B's, the next entry will be B's capital account debit, C's capital account debit to profit and loss suspense account. This particular account we will close, and B's and C's capital account will be credited based on their gaining ratio. How much is their gaining ratio? Based on that, their accounts will get debited. We can pass this entry, or we can directly in the first instance only we can combine these two entries. This is first entry, this is the second entry. We can combine it. How? B's capital account debit, C's capital account debit to A's capital account. This will be a combined entry. So this is how we are going to pass the journal entries, and this is how we are going to adjust the capital amount of the existing partners. I hope you got both of these topic, both of these things. Your whole chapter is over now. Practice the whole chapter, considering all the illustration. The best would be make your own illustration and try to solve it. It's the best thing that you can do, right? I hope you got it. In the next video, we are going to do the revision. Okay, whatever we studied till now in the third chapter, in the case of a retirement or death of a partner, the reconstitution of a firm, we are going to do the revision of the whole chapter. I hope you got it. See you in the next video next Wednesday. Till then, thank you very much.